Welcome to Forex. Now, if you are a total beginner, we are going to go through Forex lessons by following the following course overview. First, we're going to start with introduction to Forex, then we go through beginner level topics, then intermediate level topics, then advanced, and then we conclude and we start applying what we have learned on the real market. Now let's go straight into introduction to Forex. Now, Forex is typically a short form of, it's an abbreviation of foreign exchange, which means exchanging one currency for another. It is a global decentralized market for trading currencies. This means that you can trade Forex anywhere you are in the world as long as you have access to internet and access to a trading device, and your account is of course funded. Now, the importance of Forex is it is the largest financial market in the world. It is crucial for global trade and investments. For us, we shall be trading currencies online, but for those who travel or will travel around the world, when you go to another nation and you land to their airport, you will exchange your local currency into the currency of that nation at a certain exchange rate at the airport, so that you can be able to conduct your businesses, or if you are a tourist, you can be able to tour places with ease because you'll be having their currency. Now, depending on the strength of your currency, of your local currency, it will determine if you will receive more cash in form of the other currency or less cash. Now, in Forex market, we have participants, and participants vary. For us who are trading on a small scale account, we are called retail traders. But we have big market participants, which are commonly known as the market makers, because they are the ones responsible for big movements when big economic data about the US is released. We shall talk about that later when we indulge into fundamental analysis and the various types of analysis present in the Forex market. Now, these market participants are central banks, commercial banks, institutional investors, corporations, and also hedge funds. Now, in Forex, we have trading sessions. We have New York session, London session, Tokyo session, and Sydney session. Some of these sessions overlap each other. As you can see, I have inserted all the sessions here, and since I'm in Kenya, I've included Nairobi, so that when you're in Kenya, you can know which session is currently running at what time in your local time. As you can see, when it is 1 p.m. in Nairobi, 1:51, in New York is 6:51 a.m. because we are 7 hours ahead of New York, and in London it is 11:51. We are 2 hours ahead of them. Tokyo it is 7:51 p.m. They are 6 hours ahead of us, and Sydney it is 8:51. They are 7 hours ahead of us. So this is important information so that you can know when to take your opportunities in the market in your local time without necessarily having to wait for the next day in your local time, which might not present an opportunity for trading, especially if you're following your trading plan and strategy. We are going to talk all about that in future. Let us now first focus on the basics. Now, the forex market has a daily turnover of over $7 trillion. That means per day, the transaction that takes place in the forex market is over $7 trillion. Now, in that $7 trillion, if you are a diligent trader, you should not miss at least $5 per day, because the market presents liquidity. We shall define what is liquidity later. That liquidity enables you to find opportunities for trading and make a profit. Now, what can be traded in the forex market? Now, the forex market is primarily focused on trading currencies. In this market, currencies are always traded in pairs, such as the euro against the US dollar, the British pound against the Japanese yen, or the Australian dollar against the Canadian dollar. Apart from currencies, some forex brokers also allow traders to trade other financial instruments such as commodities. Examples of commodities are gold, silver, or oil, and indices. Examples of indices are S&P 500, Nasdaq, FTSE 100. Don't worry about this if they sound foreign to you. We shall describe them in future. However, these instruments are not commonly traded as currencies in the forex market. The indices and commodities are not commonly traded in the forex market, but gold as a commodity is one of the most commonly traded in the forex market, because gold is usually paired with the US dollar, and US dollar is a currency, so gold is commonly traded. And one of the character of gold is that it does not lose value. So when there is a financial crisis, investors usually secure their funds in gold, so the price of gold usually goes high. So if you are in the market and you buy gold, you make a very good profit. So it is worth noticing that the availability of trading instruments can vary from broker to broker. We shall be describing who is a broker in future, and factors to consider before selecting a broker. Therefore, if you are interested in trading a particular financial instrument in the forex market, you should check with your broker to see if it's available for trading. Don't worry yourself with all this information. We shall dive into details as we proceed. But if you have any question, don't forget to drop it in the comment section, and I will answer immediately I receive a notification. So that's it for this session. Let us meet in the next session and continue with our introduction before we become professional traders. So until next time, guys, digest that information that we have just gone through.